What would they do if they let this to continue when silver prices go through $60, $80, or even $100? You could do it in a New York minute, because what I've been predicting in my newsletter for the past 15 years has come to fruition, and it will put the world's financial system and every trading house in jeopardy. This can only happen when this is given the green light. It will be covered in the news. The silver supply and demand imbalance is all you need to see what I mean. This has been going on for 5 years, and the 8 biggest traders still hold commodity prices where they are, even silver, which is already the most shorted commodity on the planet. From Earth's vantage point, it's a commodity. As an example, in 2011, you could buy $50 worth of silver. It was 1980. Maybe I was 30 years old. When this happened, how old were they? 32. Plus, I recall that I was rather wealthy. In the past, I may have invested $27 in silver, sold it at 38, bought it again at 42, and then, after getting my behind given to me, sold it for 12 or whatever. So, I know that you recall your major blunders. In 1981, $50 worth of silver was a substantial sum of money. For $4,450, or whatever it is now, you can go see a movie. A 6-pack of beer, on the other hand, would cost around $6. There was this absurdity to it. The debasement of currencies and the massive printing of new money lead one to conclude that. I think the love bundle is much more amazing. Whatever the case may be, I have this t-shirt that Keith Neumeyer designed that says triple digits, and I wear it all the time. And you know what? He's totally right. Silver, in my opinion, should be at least $250 an ounce in the US right now due to factors like the base currency and the passage of time. Silver prices should be substantially higher, and he's been yelling it from the rooftops along with other people who have voiced this opinion, including yourself and other guests on this and other shows. Additionally, $250 would be a reasonable price. Allowing a short covering rally to happen might have astronomical implications. The effects would be twice, or even 3 times worse than if it were allowed to unfold as it should. Inflict death. Many commodities, trading houses, and the banking system would collapse under their weight. The thought of what could trigger it is enough to make me gag. Sure, it's possible. During next Wednesday's FOMC meeting, they may decide to decrease interest rates by 0.5 point, but I'm not sure. What if the United States does something foolish in, say, Venezuela? Or if Israel attacks Iran, or there's a false flag in Ukraine? There must be a plethora of black swans floating around. I can't even make out the water around them. Anything could trigger it. Nonetheless, it'll be sanctioned. When they decide something is going to happen, it will happen. There will be no free market. Your prediction will come true. When the time is right, it will be something that they let rise. All right. And when it happens, if they let it happen the way it should, it will be a day of reckoning like you've never imagined. Exactly like Ted Butler warned, you're like a bowl of spaghetti with either too much or too little butter. All the way down the line. All right, I'll tell you what. Ted had the same issue. I share Ted's frustration because, like him, it's hard to put a price on the effect that a sharp increase in the price of silver and gold would have on the financial markets, specifically on the short and long positions seen on the COMEX and in stock markets. Sure, it's stored in a single margin account for calls, so if you're missing 50 contracts and I know someone who is, then we can talk. Personally, I know someone who is missing 100 cards for 100 contracts. There is currently a bride and a high on the COMEX futures market. In a word, yes. However, short sellers are liable for paying margin calls, and their broker will ignore their calls in the event of a loss. They will simply attempt to purchase any contracts that these individuals are lacking in the market. The brokerage is ultimately responsible for this, thus it's all right to cover the position. This man has a short position, and the brokerage is supporting it as much as the client is. There are a plethora of brokerage houses and family businesses to choose from. Major players like R.J. O'Brien, RBC, Bank of Montreal, PNB Paribas, and Deutsche Bank are all there. Massive short selling of silver has been detected by 3 British institutions. The banks in question are Barclays, HSBC, and Standard Chartered. All right, and Macquarie Futures in Australia as well. All they are is extremely deficient in silver. There is one unknown, and I will simply mention it again now that it has been completed. Is that the post for everyone? The Big Short is a great film, and I'm sure all of you who are listening to this podcast have watched it. Additionally, it required a lot of guts to film something so complex, but there's this one scene near the end of the film, I still remember it vividly, where a man gives a speech gushing about Bear Stearns and how great he was, and how he was going to buy more stock, while the entire audience stares at their phones. So, keeping an eye on the stock crash, it fell by about 25%, then 30%, 15%, 13%, and so on. People were speculating that the credit default swaps, mortgage-backed securities, and collateralized debt obligations, CDOs, from the great financial crisis of 2007 to 2009 were to blame, since all the banks were implicated. It was the Big Short in silver and gold, and Bear Stearns couldn't satisfy what he believed to be a $2 billion margin call. We were all bailed out, but the true reason was what Ted Butler pointed out at the time they were in that period, I understand. Instead of letting them go bankrupt and be forced to cover the Fed's obligations, the Treasury Department approached Jamie Dimon and said, "Look, you've got to bail Bear Stearns here." If Dimon did not intervene, Bear Stearns' massive 20,000 contract short position in silver and whatever else they were short would have to be covered in bankruptcy. They couldn't let it happen because, well, silver and gold prices would skyrocket as a result. Thus, that is Jamie Dimon. This is why Jamie Dimon was placed in the short position. He was able to get out of it on Friday. About 4 or 5 years ago, they managed to get out of the market by driving down the price of silver to about $9 and gold to, I don't know, whatever. I understand. It is really appreciated. Bear Stearns went bankrupt because of that. Well, it all started when they couldn't meet a margin call. Ted wrote about it in the public domain, so now they're out. The problem is that thousands of traders are short. And when their brokerage firm says they're going to, well, just take their margin and cover these shorts. Everyone rushes into the market. After that, the short squeeze will occur, and after that, two things will be determined. What are the financial dealers going to do? When these shorts try to cover, the price of silver goes through the roof and the financial system is on the verge of collapsing. Like it did in 2009, which the banks, the CFTC, and the CME Group all own. Someone has to save them. Silver, gold, platinum plate, and a plethora of other commodities are essentially the same thing. So, what is the Federal Reserve's expected response? Where do you see the CME groupers going? Where does the LBMA stand? The only way out of this situation that can save everyone is if they will. To save the system from a short covering rally that has allowed itself to burn itself to who knows what prices, the CME Group and the LBMA must close trading in the 4 precious metals. This will release all short traders from 1 to 5,000 and deprive the long traders of all their profits. Just like in 2007 and 2009, we will bring the financial system to its knees. Put your money where my mouth is if you want my prediction on the outcome of this market. I'm long and strong. I have no doubt that you are too. You should be there too, because that's where all the listeners are. I just hope they don't be too strict with us when it blows up. The transcription was performed by turboscribe.ai. To get rid of this message, go for unlimited.